Let's get on board then. Naveen Mathur, who's Associate Director of Commodities and Currencies at Angel, and he joins us live on the show. Naveen, hi, good to have you. It really has been quite volatile, a day of gain and a day of losses, and today yet again we've seen some decline coming in. What's your sense? How are you trading crude prices?
Manisha, thank you and good evening to you. I think the markets are really range bound from the last few days. If you see both the WTI and the Brent, we are seeing around 40 level, $45 levels for the WTI, and Brent is hovering around $50, 48 to $50 levels. I think the markets are stabilizing around these two levels for WTI and Brent, and we see kind of a sideways movement. You rightly pointed out the fundamental reason of the unexpectedly high inventories expected. Overall, the trend still remains sideways to a bearish trend. But fundamentally, at least for the intraday, we are seeing some positive bargain hunting at the lower levels. Therefore, the view is that if technically one wants to go into for the crude oil market on the MCX, may initiate the positions on the low side at around 2940 on the October contract with a target of 3040. An expected stop loss for this trade would be around 2820 or so.
Naveen, what's your sense also coming in for the base metal space? Because yesterday was a day when it was a meltdown coming in for that area. It, of course, turned around by the time New York markets opened. And we've been quite mixed at this point in time. Having said that, markets are waiting for the Chinese manufacturing PMI data tomorrow. And we also have seen higher supplies, lower demand, China concerns, all of that continuing to plague that sector.
Nothing new, Manisha. It's all what we know from the last so many months. China factor, the demand factor from China, the supply glut. Overall, we feel up till unless we don't get real positive news coming out from the global economy and particularly China, we won't see revival onto the base metal and the base metal pack prices. So overall, we still remain long to medium term bearish. But intraday, as I said again, technically one for the intraday position can go in for a buy on the base metals. Copper for the month of November can be bought at around 337, 38 levels. 32 would be the stop loss and targets in a range of around 345, 347. It's currently trading at around 338 to 339.
One more question before we move to the precious metals, Naveen. Industrial commodities, of course, have been quite volatile, and we've seen every China news, every US data come and actually make the markets very nervous. Would you say that we are near bottom when it comes to crude and copper kind of commodities, or we still are looking at a black pit here?
Manisha, keep your fingers crossed. I think, yes, we are somehow kind of bottoming out. But as you rightly said that these two commodities and these particular commodities with respect to energy and base metals are largely governed by how the global economy fares. We have seen the trend on the downside for the estimates of the global economy growth. And with China concerns looming large across the global markets, we may see some kind of a pressure onto the markets for some more months. So I think although we are at the low levels of the base metals and the crude, but you never know. Means we always keep hearing that this particular shale oil production may get reduced to around say around 1 million barrels a day. We are in the US at around 9.5 million barrels a day. So I think with the capex getting down and with the lag effect, we may see some rigs getting out of the business, and we have already seen some small rigs out of the business. So I think the strategy of OPEC plus the shale oil gas concerns would continue to drive wherever the prices may move on. And I think particularly we still remain bearish for some time on crude oil, and particularly for the Chinese concerns, you don't have good things coming out for the base metals too. So I think overall both these drivers of the economy, the commodities or the energy and the base metal drivers for the economies across the globe may continue to remain under pressure, but I don't see too much of a downside from here.
And on your screens, we are flashing the latest data that has come in from IMD. The monsoon rainfall is at 86% of 50-year average, and that really makes it quite on the lower side. And IMD also says that the rainfall is 14% deficient till time. The rainfall was excess normal in 61% of India, but the rest of India, that would be 39%, still has it less than normal. 2015 monsoon then is 14% below average is the view coming in from IMD. Remember, it's the last day of monsoon season, technically speaking, if we go by the dates, and that's the reason IMD has come out with the detailed one. It is the lowest rainfall since 2009. The monsoon this time around has been. So that's yet another thing coming in from IMD. Not such a good news really when it comes to the Rabi. Before we let you go, Naveen, what's your sense on the gold and silver prices? Because it's not good news from them too, because much of the buying comes in from rural India.
Absolutely. In India, which consumes approximately 50 to 55% of gold, and if we have the monsoon deficiency, definitely the income levels of the rural population would not be too great, and therefore may see some tepid demand. Still, we're pretty much range bound on international space. It's hovering around $1,100 levels and $1,120, $1,125 levels right now. I think the range is restricted to an extent of 1,100 to 1,150 Manisha right now for a couple of days. And I think for Indian markets again, we will see around 26,000 to 26,500 levels for some time. Rupee would be a critical factor. The way the markets have behaved yesterday and today, the rupee would bound to be appreciative, and hence we may see some kind of a pressure building up in Indian rupee terms for the gold prices. But technically intraday, one may go in for a long position, and we recommend to buy the gold contract on the December month on MCX at around 26,150 to 200 levels, target at around 26,350, 400 levels with a stop loss of around 26,000.
Sure. All right, Naveen, thank you so much for joining us with that update on the commodities space. And of course, we've told you what the IMD also has come out in sense of monsoons. But we'll take a very short break. When we come back, we'll talk about the rupee, which has posted the sharpest monthly gain in 8 months.